Key takeaways from the 28th GST Council Meeting. In the 28th GST Council Meeting, held to discuss and fine-tune the Goods and Services Tax (GST) framework, several noteworthy decisions were made. These decisions aim to simplify the tax filing process, reduce tax rates, and address key concerns affecting businesses and taxpayers across India. Let's dive into the details of the key takeaways from this meeting. Simplified GST return filing. The government has unveiled a new mechanism for GST return filing during the 28th GST Council meeting. This change is set to significantly enhance the ease of doing business, especially for smaller taxpayers. With approximately 93% of taxpayers having an annual turnover of less than 5 crores rupees, this move aims to streamline the compliance process. Quarterly GST returns for small taxpayers. One of the major decisions was the approval of quarterly GST return filing for small taxpayers with a turnover of less than 5 crores rupees. Quarterly returns will closely resemble monthly returns, but GST payments will still be due on a monthly basis. This provision is available to small taxpayers engaged in B2C supply or those involved in both B2B and B2C supply. Small taxpayers exclusively engaged in B2B supply do not qualify for quarterly returns under this scheme. Simplified monthly returns. The monthly return filing process has been simplified considerably. The new GST return will feature just two main tables, one for reporting sales and the other for purchases, enabling input tax credit. Sellers can continuously upload invoices, which buyers can review and lock for availing input tax credit. The process will be as straightforward as upload, lock, pay for most taxpayers. Nil return filing by SMS. To further simplify compliance, the GST network, GSTN, will soon introduce a feature allowing taxpayers to file nil GST returns by sending a simple SMS. Reopening of GST migration. The Council approved the reopening of the migration window for taxpayers who had received provisional IDs but failed to complete the migration process. Those who had filed Part A of Form GST Reg. 26 but not Part B can approach the relevant Central Tax State Tax Nodal Officers by 31st August 2018 to complete their GST migration. Importantly, these taxpayers will not be penalized for late filing of GST returns. However, they must file their GST returns first and pay any applicable late fees. The GSTN will provide a credit reversal for the late fee amount in the cash ledger under the tax head. GST rate changes. Rate reduction from 28% to 18%. Paints and varnishes, including enamels and lacquers, glaziers putty, grafting putty, resin cement, refrigerators, freezers and other refrigerating or freezing equipment including water cooler, milk coolers, refrigerating equipment for the leather industry, ice cream freezer etc. Washing machines, lithium-ion batteries, vacuum cleaners, domestic electrical appliances, such as food grinders and mixers and food or vegetable juice extractor, shaver, hair clippers etc. Storage water heaters and immersion heaters, hair dryers, hand dryers, electric smoothing irons etc. Televisions up to the size of 68 centimeters. Special purpose motor vehicles. Example, crane lorries, fire-fighting vehicle, concrete mixer lorries, spraying lorries, works trucks, self-propelled, not fitted with lifting or handling equipment of the type used in factories, warehouse, dock areas or airports for short transport of goods. Trailers and semi-trailers. Miscellaneous articles such as scent sprays and similar toilet sprays, powder puffs and pads for the application of cosmetics or toilet preparations. Rate reduction from 28% to 12%. Fuel cell vehicle. Further, compensation cess shall also be exempted on fuel cell vehicle. Footwear. A 5% GST rate will apply to footwear with a retail sale price up to 1,000 rupees per pair, while an 18% GST rate will apply to footwear exceeding 1,000 rupees per pair. Refund of accumulated input tax credit. GST at the rate of 5% was previously applicable to fabrics, with the condition that refund of accumulated input tax credit, ITC, due to inversion would not be allowed. In response to the fabric sector's concerns, the GST Council recommended allowing the refund of accumulated ITC on fabrics due to inverted duty structure, albeit with prospective effect. The decisions made during the 28th GST Council meeting aim to streamline GST compliance, reduce tax rates on various goods and services, and address challenges faced by small taxpayers and the fabric sector. These changes signify a continuous effort to improve the GST framework and facilitate businesses across India. Stay tuned for further updates on GST developments, and if you found this video informative, please consider liking and subscribing to Vinayak's Easy Notes. Your feedback and comments are always welcome. Thank you for watching.